I think one has to make a distinction between the chaebol companies and the non-chaebol companies in Korea. There are sort of structural reasons why a lot of the chaebol companies have had low valuations, because it was not in the interest of the controlling families to let these share prices go up because of inheritance taxes. There were a couple of other disincentives as well, and the politicians in Korea, on both sides of the aisle, I think that's important since we're going into an election, the value updrive in Korea is actually a bipartisan, it's not really consensus, but it's bipartisan pragmatism. Both sides realize that Korean households care about this, because you've got almost as many stock market investors as you have homeowners in Korea. And so even the opposition has made a continued value up part of its program. In fact, they're going to go further. They're going to drive changes to the commercial code, making directors responsible to minority shareholders. Korea is one of the few countries where that isn't the case today. So the value updrive is bipartisan. It has occurred because there needed to be a change in incentive of companies caring about their share price. The chaebols are still not in because inheritance tax hasn't been tackled politically, but a lot of other things have been tackled. Commercial code, very soon being one, the other one being taxation of dividends on both the corporate and the receiver side.
I like what you said, bipartisan pragmatism. I might actually use that in the future. But do you think we'll actually get there? I mean, if the Democratic Party wins the next presidency, we could actually, I don't know, take another step further away from the idea of all these tax issues being resolved for these chaebol companies.
Yeah, absolutely. I mean, inheritance taxes are likely to stay. Although never say never, most political change always comes from the side of the aisle that you don't expect to go for it, right? That has been the case on many political issues over the years. But yes, I mean, our base case would also be that we won't see inheritance tax reform, and therefore you need to tread carefully and look at those stocks where either an inheritance event is very far away, and therefore current factors can dominate, or where that dynamic is less at play and other factors play a role, which is why we have been heavily invested in the Korean financials that tend not to be controlled by a dynasty, and where also the drive for the value up program has actually started to occur even before value up was a thing. I mean, we had been in dialogue and actually successfully driving some Korean management teams towards doing more for minority shareholders even before the value up program came on board, in part because the FSS was using the banking sector as a bit of a test bed for the value up program in general. So the financial sector remains a good one. However, you're really seeing this now spreading across Korea and Korean mid-caps. I really recommend anyone to go on the website of the KIND system of the Korea Stock Exchange. You've got dozens of companies who have submitted value up plans that detail very exactly how they're going to increase dividends, buybacks, and return on equity. It is truly not just a copy of Japan, it's or the SOE reforms in China. It is probably the most structured effort at the moment in global capital markets on this.